Hello, this is Ernest Burley, your CIA, your cool insurance agent, back at you again with some more great information on insurance. Again, I'm a licensed insurance agent in many states across the country. I have over 30 years of experience in the industry and have clients all across the country. The purpose of this podcast is to educate you, to enlighten you, and to empower you with objective and unbiased information so you can make the right decisions, the best decisions for you and your family. I specialize in all lines of insurance, whether it be auto insurance or life insurance, home, condo, renters, church, long-term care, disability, health insurance. So I specialize in all areas of insurance. Hey, that's my intro. I don't like long intros. I like to get right at the material. So let's get at it. All right. Now, what I'm going to do today is talk about check yourself before you wreck yourself. But remember, I said in my last podcast about that we had to do a part two. So this is part two to that. The first podcast, we talked about mainly coverages and how to take advantage of a policy as opposed to it taking advantage of you. So we talked about coverages and how the coverages work. Today, we're going to talk about discounts and how to save some money. So tune in real close on this because some of these discounts people have no clue about. So I want you to ask your insurance company about these discounts as we review them, okay? So let's just recap the podcast that talked about check yourself before you wreck yourself, part one, where we talked about coverages. Can't go into detail on the coverages, all right? You got to review that podcast, listen to that podcast. So the main coverages of your auto policy is what we kind of discussed. Liability coverage. So I was trying to encourage you not to carry the state required minimum liability coverages because that does not work in your best interest. The premium that you save is very small. It's not a lot. And you'll wish you had not done that if you get into a situation. So you're not getting over on anybody but yourself if you carry those low liability limits. Believe me, it doesn't save you a lot of money. So let's not do that. We talked about the physical damage coverages to the vehicle, comprehensive and collision. So those are two separate coverages. They cover two totally different types of situations, and you can have one without the other on the vehicle. So I'm not going to go into detail, but listen to the podcast, and we talked about the difference between those two. PIP coverage, personal injury protection, which is also called no fault in some states. We talked about that coverage. You want to make sure that you are aware of that coverage and how it can protect you and passengers of your vehicle. Medical payments coverage, that's another main coverage on policies. Not available in all states, but some states have that medical payments coverage as an option in addition to PIP actually in some states. So you can have PIP coverage and also medical payments coverage. And those coverages are mainly for injuries sustained during an automobile accident. We talked about uninsured motorist coverage. So with that coverage on your vehicle, you make a claim against your own policy for what you rightfully deserved against somebody else's policy. So if somebody else is riding dirty, remember we talked about one of my employees said they're riding dirty, and I was like, what in the world? And that's a person riding around without insurance is riding dirty. So that's funny. And I forgot to mention this, but there are big fines in most states for not having insurance. If you have a vehicle tagged in the state, they want you to have insurance on it. So there are fines. I had a guy in my office years ago. He was sitting here crying and boo-hooing like a baby because his fine was so high. He just disregarded his insurance, didn't pay it. And the state caught up to him and they said, you owe us a few $1,000s. And he was just, I was like, are you serious? Are you sitting there crying in front of me? But anyway, so yeah, don't play around with that because it's a double whammy, right? If you get into an accident with somebody and you have no insurance, then you're exposed. You're liable for their damages, injuries and damages. So you have a problem there. And then on top of that, you have fines from the state. So don't put yourself in that situation, okay? So that's a recap on coverages. Check yourself before you wreck yourself, part one. Here's part two. We're going to talk about discounts and endorsements. I'm going to start off with a couple of endorsements I highly recommend for you. And then we're going to do a deep dive into a lot of discounts that people don't know about. And some you do know about, but we're going to discuss those too. So one endorsement I highly recommend for clients is called emergency road service. And a lot of people know it as towing, and that's what they call it, your towing coverage. But it covers a lot more than towing. It's called emergency road service because it gives you coverage while you're on the road and need that type of service. So a lot of people call for towing, and that's the normal common claim under that particular type of coverage. But it also pays for, like if you run out of gas, the delivery charge for the gas. Now, it doesn't pay for the gas, okay, because you should have had gas in your car, but it will pay the delivery cost for getting that gas to you so you can get on your way, or if you need oil in your vehicle, the delivery charge for the oil. If you lock yourself out of your vehicle, pays for lockout service. That's what it's called, lockout. Pays for someone to come pop your lock and get you into your vehicle. Also pays for up to 1 hour of labor at the location where your car is broken down. So say if you your fan belt pops off and someone needs to come and put that on for you, or what have you, up to 1 hour of labor at the location. It's not going to pay for the parts, but it will pay for up to 1 hour of labor at the location so you can get on your way. So there's a lot more packed into that so-called tow coverage. It's really called emergency roadside service coverage. And most insurance companies offer that. And it's very inexpensive, maybe like $2 or $3 a month. So I highly recommend you have that on your auto insurance policy, okay? Gap coverage, here's another endorsement I highly recommend. If you get into an accident, when a vehicle is a depreciating asset, okay, which means as soon as you drive that vehicle off the lot, it's worth less than what you bought it for. So if you get into an accident and you have a total loss, then say, for instance, you owe $15,000 on the vehicle, but it's only worth $10,000. Guess what? You still owe $5,000. The insurance company is going to pay you what that vehicle is worth. It's not going to pay you $15,000 because you owe that on the vehicle. It pays the value of the vehicle, which is $10,000. That means you still have $5,000 to pay. That's a bad situation to be in, where you have to continue to pay that car note. And you have to go to get another vehicle because you have to drive around. You have to get back and forth to work, right? So you have to get another vehicle and have a car note on that vehicle too. That's 2 car notes. If you have gap coverage, the insurance company will cover the gap. So the $5,000 that you owe on the other vehicle that was a total loss that you were upside down in, really, they will pay that. They will pay the $5,000 so you have no car note there. That's why it's called gap coverage, because it covers the gap. The $5,000 that you owed, or whatever amount it is that you owed on that other vehicle, they will cover that spread for you so you don't have 2 car notes. That's a very, very good endorsement to have. And some of these companies have added a twist to it to where they have like what they call new replacement vehicle coverage or better replacement vehicle coverage. So if you total your vehicle within a year or 2, they'll give you a replacement vehicle if you have that endorsement on your policy. So it's well worth it to have that endorsement on your policy too. And it costs maybe 10, 15 bucks a month or something like that. It's not that much either, but it packs up a bunch of coverage. So I highly recommend that endorsement too. So those are 2 endorsements. There are a lot of endorsements out there, but those are 2 that I'm really partial to, the emergency road service and the gap coverage. Now, let's get into discounts to save you some money, some little known discounts and some well-known discounts. This first discount is something a lot of people don't know about. I'd venture to say 95% or more people have never heard of this discount. It's called the advance quote discount. So if you're searching around for auto insurance, a lot of companies will give you a discount if you get your quote today, but the policy is not made effective until 7 or 8 days after today, after the day you get that quote. It varies by company. Some companies it's 7 days and some companies it's 8 days. So say if you get a quote on the 1st of a month, but you don't get the policy, you don't make the policy effective until the 8th of the month or the 9th of the month, then you get a discount just for doing that. And the reason why that is because the insurance company figures you to be a better risk because you currently have a policy and you're searching around for coverage, as opposed to saying, I need coverage right now. So if you need coverage right now, you're not going to get an advance quote discount. You won't get that discount. So definitely ask about that. It's an easy way to save some money on your auto insurance, okay? Next discount is a multi-car discount. A lot of people are familiar with that. So if you have multiple cars insured with the same company, you get a multi-car discount. So that's a great thing. And also, here's what a lot of people don't realize. Even if they're titled to different people in the same household, so sometimes people live in the same household, have the same insurance company, but they own their own vehicle. That discount can fall off of your vehicle if it doesn't have the same name on the vehicle. So you want to make sure that your insurance company has not bumped that discount off or not giving you the discount because the vehicles are titled to different people. If you live in the same household, and you're insured with the same company, 9 times out of 10, they will give you that multi-car discount. They'll force it onto your policy if the computer has bumped it off because of it being titled to 2 different people. So be sure about that you're getting that discount if you have multiple vehicles insured with the same company, or the same company insuring multiple vehicles within the same household, even though they're titled to different people. Next discount is called a multi-line discount. So this discount is a discount for getting cross policies for the company. So if you have the auto with a company, and then you also have your homeowners or renters or condo policy, those are different. That's a different line of insurance. Auto insurance is one line of insurance or type of insurance. Homeowners is a different line or different type of insurance. So companies are like, well, hey, if you bundle it, I don't know if you heard that before, if you add these policies together and have both of them insured with us, we'll give you a discount on each of those policies. A multi-line discount on the auto policy or auto policies, each policy, if it's multiple vehicles, and also on the homeowners or renters or condo policy. And some companies will also give you a discount on the auto policy if you have a life policy too. So that's another discount on top of the homeowners discount or renters or condo discount. So if you have a life policy with that company, they'll give you another discount on your auto policy. Some people don't know about that. That's another discount, save you some money. Accident-free discount is another discount you can get. Some companies have it to where you have to be accident-free for a certain period of time. That's normally what the situation is. So 3 years or 5 years or 10 years, and they increase the discount at each increment. So at 3 years, they may give you a 10% discount. And at 5 years, they may increase it to 15 or 20%. And at 10 years, they may bump it to 20, 25%, who knows? So most companies have some type of accident-free discount because they want to encourage you not to have accidents and cost them money. So they will discount your rates if you have no accidents for an extended period of time. Now, once you have an accident, that's going to drop off, and then your clock starts again, right? So ideally, you want to have no accidents so you don't have so you don't lose your accident-free discount. Now, another discount is called accident forgiveness. So some companies have this built in. So if you're with them a certain period of time, they will forgive the first accident, not charge you or surcharge you for that accident. So if you have an asphalt accident, they will not surcharge your premium for that first accident if you've been with them a certain period of time. So 1 year, 3 years, or what have you, varies by company. So you want to check and find out what the criteria is for that, right? Now, some companies let you purchase that immediately. So you have an accident next month and they will forgive that accident, but sometimes there's a premium for that. So you may have to, that's an endorsement you have to add on to the policy and pay a premium to have your first accident forgiven. So you want to inquire about that to see what's in your best interest. This is all about unbiased and objective information. Call your insurance company, find out what's in your best interest, what's best for you. Good student discount. This is another discount that's applicable to youthful operators. So if a youthful operator has, and a youthful operator is someone who's 25 or 24 or younger. Different companies have different breakpoints on that. Some companies, they consider you an adult at 24 and some at 25, which means they give you an adult rate. Now, I know your child thinks they're growing at 18, 20, 21 years, but no, they're not growing. They're still living at your house and eating your food and don't have any money, don't have a job. Okay, so they're not grown. And the insurance company realizes that. So they have a youthful operator rate until they reach age 24 or 25, depending on the insurance company. And that rate is much higher. So youthful males, highest rate out there. Youthful females, next highest rate out there because they're young, they're inexperienced drivers, basically. So there are ways to get discounts against those premiums though. So here's one, the good student discount. If that youthful operator is maintaining a B average or better, then there's a discount against their premium, which is great. Most companies do that for you. Now, here's what I've had some clients do this. They've told their, ideally you want your child to be getting good grades anyway, but you can give them an extra incentive and say, okay, well, if your premium would have been $150 per month with the good student discount, but it's $275 a month because you don't have this good student discount, you have to pay the additional $125 or whatever that is per month. Maybe that can give them an incentive to make sure they're getting their grades too, in addition to just wanting to get good grades all over. In general. So yeah, that you could do that. But I would highly encourage you to try to get your good student discount and ask your insurance provider if they have that discount. Now, if you're 30 years old, no, you can't get a good student discount. Say, hey, I'm working on my master's or my doctorate. Doesn't matter. And the reason why that is because you have an adult rate. The reason why a good student discount is applicable is because if a person is 25 or 24, if they're younger than 25 or 24, they have a youthful operator rate, and that's a much higher rate. So that's a discount that can go against that rate. Once you become an adult, you're 24 or 25, depending on the company, you get an adult rate and you don't have that expensive youthful operator rate. Another discount, here we go, child away at school. So here's a discount you can have for a vehicle that has a youthful operator on it, but that child is away at school a long distance. And it's normally 100 or 150 miles, depending on the insurance company. They will give a discount to that policy as long as that child is at least that distance away from school and they're not operating the vehicle. Now, they can't take the doggone vehicle with them, okay? Don't be silly. So the vehicle has to remain at the home and the child is away from home. That's why it's called a child away at school discount, because they're far away from that vehicle. They're not driving the vehicle. So it's less of a risk of them having an accident in that vehicle. So child away at school, check into that discount. That's a very important discount, and that can save you a ton of money also. And also, the child can't be down the street. So that's why I said far away. So the school can't be 5 or 10 miles away. It's got to be substantial distance away for them to get that discount, and the car remains at home. Another discount, a senior discount. So if you're 50 or 55, different companies, consider different ages as senior, you can get a discount on your rate for being 50 or 55 years old. So there you go. Now here, got to be aware of this. Some companies start increasing your rate when you start getting into your 70s and 80s, though, because what they're looking at that point is the potential for loss. So they're saying, well, due to your age, your awareness might not be as snappy as it was before, or your reflexes may be slower. So when you start getting into the 70, 80, 90, they may increase the rates instead of giving you a discounted rate for being a senior citizen. So look out for that. Mileage programs. Some companies have mileage programs where you can pay by the mile if you don't drive your vehicle that much. That may save you a ton of money there, a mileage type program. Another discount is a driver monitoring type plan. I know you've heard of these, where you can plug a device into your vehicle and the insurance company can kind of monitor your driving habits and give you a discount based on what you're doing. Some of them have an app that you have on your phone. You turn the app on when you're driving your vehicle, and it will, either give you a discount. Sometimes it gives you a discount, and some companies send you a little incentive check if you meet their criteria as far as driving safely. Some of the things they monitor are like quick braking, acceleration, your speed, the time of day that you're driving, things of that nature. They take a look at to figure out whether you're driving safe or not, right? So those are some things they look at to figure out whether they're going to give you a discount on your premium or not. Here's another discount you can do. Some companies have what's called a withdrawn from use. So if you're not using your vehicle, you can, majorly decrease the amount of premiums you're paying on the vehicle because it's not being used. And last but not least, classic discount, antique, historic rating. They're kind of called different things at different companies. So if you have a vehicle that's a certain amount of years old, so 15 or 25 years old, I forget which is which, but classic versus antique. I think antique is a little older. Classic may be like 15 years and antique may be like 25 years or something like that. Historic rating. So if you have something like that, you can get a discounted rate, but only if you're not driving the vehicle around a lot, right? So this is mainly for vehicles that are kept in very good condition, and they're mainly driven for like shows and competitions and contests, not racing, okay? So if your vehicle's in very good shape and you take it to shows so people can look at it and judge it and things of that nature, then you can get a discount for it because you're not driving that vehicle that much. And when you do take it somewhere, it's mainly for show. So you can get a discount for something like that. Now, this doesn't apply to your hoopty that you're driving to and work from work every day, right? Just because your car's old doesn't mean it's an antique or a classic. It's just old. So there you go. That's your discounts. Those are your discounts out there. And hey, if I missed some, ask your insurance company, hey, are there any other discounts that I can get besides the ones I just rattled off to you from my CIA, my cool insurance agent? So that's it for today. Let's recap it. So we talked about checking yourself before you wreck yourself. We talked about the coverages. We recapped that. So we're not going to talk about that now. That was part one. Part two, we just talked about today. Those are discounts and endorsements. So just go over those discounts and endorsements that I just went over and make sure that, you check those out and see what's in your best interest there. I think those are some good discounts that will apply to a lot of you out there. Some of them you don't even know about. And the endorsements, if you don't have those on your policies, really check into that and see if that can work for you, okay? So the takeaway, you can save a substantial amount of money if you make sure that you make the policy, the insurance policy, the auto insurance policy work for you instead of you working for it. Take advantage of the policy as opposed to the policy taking advantage of you. And there are ways to do that. You just have to have knowledge about it, understand it, and know how to work the system. Okay, that's it. Thank you for listening. Once again, I really appreciate you listening to my podcast. Please share with others and ask them to share with others. I love getting the feedback. I got some feedback today already on a previous podcast where, so I get various feedback. So I really do appreciate it. I appreciate y'all listening. And if you have an idea that you want me to talk about, I'm more than willing to consider that. So hit me up on my email, ernestburleyjr@gmail.com. That's the easiest way to get in contact with me, my full name at Gmail, or you can contact my firm at 301-262-2600. Again, 301-262-2600. This is Ernest Burley, your CIA, your cool insurance agent, signing off once again. Until we speak again, take care of yourself and have fun out there.